Hello, everyone, and welcome to this presentation of trading with support and resistance. Now, support and resistance is a very simple and popular method in which to apply to your trading, and most traders use this in some fashion or another, but I believe that most traders are actually implementing it incorrectly. So in today's presentation, I'm going to share with you my thoughts, what I feel is the correct way to trade with support and resistance, and hopefully we can increase your odds for success when using this technique. Welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. And if you're not familiar with my website, we are first and foremost an educational company. My goal is simply to educate all of our students and all of our members so that you will ultimately be able to make your own trading decisions. You see, it's my belief that the reason why most traders fail, and it's been estimated upwards of about 80%, possibly even 90%, because most traders fail because, in my opinion, is because they are taking their cue or their decision-making process from someone or something else. In other words, you're asking someone what they think the market's going to do. You're going to a website or a chat room where they tell you what to buy or what to sell for that day, or you're looking at some trading guru on TV. What we try to do at Specialist Trading is fill you with all the knowledge, the tips and techniques that I've accumulated in nearly 40 years so that you can ultimately empower your own trading. I believe that's really the only way one can become consistent in the markets, because I take that from personal history. When I first started trading nearly 40 years ago, I struggled tremendously, so I know what a lot of you may be going through. Now, I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. 9 of those years I was a specialist. And if you're not familiar with what a specialist was, because there aren't a lot of them around that much anymore, a specialist was simply a person that made markets in roughly 35 to 50 stocks. So if you wanted to buy or sell a particular stock or issue, you had to go to the trader who specialized in that, who made the markets in those. So that's what I did for roughly 9 years. I traded through the crash of 1987 and the bull market that followed. I've been involved in just about every market environment imaginable. I've traded straight up markets, straight down markets, sideways markets. I've traded strategies, systems, techniques, so I know what works in terms of consistency, and I know what doesn't work. So at Specialist Trading, all we try to do is empower all of my students with the techniques that I have found to show a certain level of consistency. We mentor and work right alongside with you, and then hopefully you can go on your own and make your own trading decisions. Once again, that, in my opinion, after I've learned all of this over 40 years, is the only way one really becomes consistent in trading the markets. Now, I'm going to show you a great technique today that you can start applying as early as tomorrow if you'd like. But before we begin, we are required to show you this, so please take a moment to view our disclaimer. I am going to show you a lot of performance results using this particular technique with support and resistance. But please remember that we can in no way guarantee that any of the results I am about to share with you will be repeated in the future. So once again, we are required to show you this. And as you are taking a moment to view our disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. You may want to copy down our handle right there. It's the abbreviation for Specialist Trading, so it's easy to remember. It's at SPCLSTTRADG. Every day I post different information, anywhere from daily financial wisdom to actual signals that our strategies have generated. Now, the format under Twitter is very limited. You're only given so much that you can write on. So if you'd like to get more detailed information and watch some videos of ours, my sister site, which is Pro Trader Strategies, has put together a Facebook page. So you can simply log on to Facebook under Pro Trader Strategies, and there's a lot more detailed information, a lot more educational videos, and a lot more information about myself. Okay, so lots of ways to find out about myself and what we do at Specialist Trading, along with my sister site, Pro Trader Strategies. All right, so before we begin, remember, once again, our philosophy is an educational one. As you see here, my goal is not to trade for you. My goal is not to force feed you signals. My goal is not to tell you what the perfect time frame is or the perfect place to enter is. My goal is simply to teach you how to trade with the specialist edge. This is the same edge that was able to turn my trading around when I first started nearly 40 years ago. As I stated, I struggled tremendously, even though I was on the trading floor. And I had access to information that most of the public didn't. I could see what the book was in front of me, where the buy and sell orders were. I had access to institutional buyers and sellers. I still couldn't make a dime my first 2 years of trading. It was very difficult. I was doing everything I had been taught. I was going to all the seminars. We didn't have webinars back then. There was no internet. But I was also reading all the books, listening to all the gurus. And sure, I would have a winning trade every once in a while, but over time, I really had nothing to show for it. It would be pretty much one step forward, two steps back approach. It wasn't until my mentors took me aside and saw how much I was struggling. These were specialists themselves on the floor that saw that I was struggling, and they were able to turn my trading around just by feeding me some of the same wisdom and techniques and strategies that I teach to my own students. So this is what we do at Specialist Trading. My goal, as you see here, is to teach you, not to force feed you signals and to trade for you and have you come to my website on a nightly basis and find out what to do the next day. That, in my opinion, is a recipe for disaster. But what we do is we teach you and empower you with this information that has stood the test of time, and then hopefully you'll be able to go on your own and turn your trading around the same way these things were able to turn my trading around, and I believe have sustained me for nearly 40 years. Okay, so today is going to be a great class, and since we are an educational company and run things as if we were in the classroom, if you have any questions, kindly wait till the end of today's class. It'll only last roughly about 25 minutes, and then I'll take all your questions at the very end, okay? Now, the one question I will answer prior to that is probably the most popular one, and that is this being recorded? Yes, it is. So if you have to leave early, or if you're having technical difficulties, you can simply request a link to this from ProTrader Strategies, okay? All right, so kindly just wait till the end to ask any questions. All right, so let's begin. As I stated in the beginning, I struggled tremendously. So I know what a lot of you may be going through, okay? Trust me, I was there. In fact, I even thought I was going to get fired because I really could not make a dime. I couldn't make ends meet. And so I was lucky enough to have some mentors who were able to turn my trading around. And some of the wisdom that they taught me was right here. They said, Steve, it is the easiest thing in the world to complicate your trading. Anyone can do that. But it's the most difficult thing in the world to simplify your trading. Now look at your trading, all right? Is it too complicated? Are you putting things on your trading plan on a daily basis? Are you watching a ton of indicators? Are you going to tons of chat rooms or trading rooms trying to figure out what everyone else is doing? Are you listening to the news and waiting with bated breath on every news announcement that comes, either earnings, economic reports, interest rates, anything? And are you watching the TV and all the guys after the market's closed to see what they're thinking? Okay, it's basically just totally overcomplicating your trading. Trust me, I know what that's like because that's what I used to do. That's the way my trading was. In fact, it's almost unbelievable how I was ever able to trade because I had to wait for all these things to line up because my trading plan was so complicated. But just as they said here, it's the easiest thing in the world to do that. In other words, it doesn't really take that much of a challenge to add more things onto your trading plan. You know, anyone can do that, whether you've been trading 30 years or 30 minutes. You just keep having one more indicator, one more news event, one more chat room to go to. But what's really challenging is to simplify your trading because that's the most difficult thing in the world to do. Because everyone has been taught, myself included, that the more complicated and the more things you have involved in your trading plan, the more valid it will be and the more successful it will be. But it took me years to realize that it's just the opposite. Most trading plans will work and have a higher level of consistency if they are simpler in reality. In fact, look at the traders who've been trading for a relatively short time. Most when we say short time, anywhere from 5 to 10 years, relatively a short time. Their trading plans are very complicated, convoluted logic, a lot of indicators, a lot of specific things you've never heard of before. But the traders, if you ever do any research, the traders who've been trading 30, 40, 50 years down the road usually have trading plans that maybe have 4, 5, 6 rules tops, maybe looking at one indicator, not looking at any news, all right? Not following any trade rooms or chat rooms. Their trading plan is extremely simple, and that's what has sustained them. So this is the mindset I had to really grasp in order to become consistent. And this is what I'm going to show you today, how simple trading can really be with support and resistance if you simply let go of this complicated logic we've been taught to hold on to, and just simply let go of it because it really has no consistency in it. All right, so here's what you're going to learn today. We're going to talk about conventional trading of support and resistance, the way all of us were taught to trade it. But then I'm going to tell you what I believe after years and years of having no success, what I really feel is the true definition of support and resistance. Then I'll show you what I feel is the correct way to trade support and resistance, what has shown a great deal of consistency in my trading with this technique. And then lastly, I'll show you how to increase your odds even more by simply applying one more technique to your support and resistance trading, okay? All right, so we're going to begin now. Once again, if you have any questions or you came in late, kindly wait till the very end of class to ask any questions, and then I'll open up the question and answer box. I'm not even going to open up the box until the end, so it doesn't even make any sense to ask a question. All right, so let's go first of all and define the conventional trading of support and resistance. Now, this is the standard definition. Support and resistance is a concept in technical analysis that states the movement of the price of a security will tend to stop and reverse. Now, that's extremely important. It will stop and reverse at certain predetermined price levels, okay? So if we look at an older chart of Apple here, and I'm going to start out by sharing with you some older charts for educational purposes, and then later on in the presentation we'll go to more recent charts that are as recent as this past week. All right, so if we look at Apple here, we see that, well, conventional wisdom would tell us there's support. After all, we've come down to that level, so there must be a lot of institutional buying there. The volume probably picked up on the buying side. So this is where we've been taught that price is going to come down to some certain predetermined level, and then it's going to reverse. And just like magic, it works perfectly, right? We can also see this in futures. Here's an older chart of the E-mini futures, a daily chart. And once again, price is rising, but just can't get through this level. So it's been predetermined that this is resistance. So if all the requirements are met with your trading plan and support and resistance, well, this should stop and reverse at this resistance point, right? So you should want to sell here, and works like magic, okay? So it looks pretty good. All right, so this is standard convention and implementation of support and resistance. Here's the only trouble though. After a while, things like this will happen. We have all the rules line up. We have perfect support right here. So right now you jump in and you say, well, this is exactly the way it looked with Apple and all the other things I've been trading, all the seminars I've gone to and webinars. So I'm going to step in and buy here, and look what happens. Okay, does that look familiar to anybody? Now, it doesn't have to just happen on a stock. If we look at the currency pair, the euro-dollar, here's an older chart of the euro-dollar. Euro-dollar has been slowly going lower, but it hits some type of support right here. Maybe that's where the big buyers are coming in. So you want to step in and buy thinking it's going to bounce and at least retrace some of that downward move. So you jump in and it doesn't even hold there at all. Okay, what happened? What happened to that support? Or we can even go to a different time frame. We can go to a 60-minute or hourly time frame, an older chart of IBM here. All right, IBM has been going higher, but then it just can't get through this specific level. So it meets all the requirements to say that it's valid resistance. After all, the institutions are all selling there. It can't get through, and the volume confirms it. And so this is valid resistance point. So you want to sell here. So you sell, and it goes up a little higher. You say, well, what happened to the resistance? And you think, well, maybe that wasn't the resistance, maybe this was. Okay, so I'll sell here, and it goes higher, you sell there, and after a while, you see that there is no consistency in trying to pinpoint or figure out support and resistance. Does this look familiar to anyone? Okay, now, first of all, let me state, I know that traders do very well trading conventional support and resistance type rules and implications. I mean, I even know some traders that trade support and resistance off of the standard way, and they do very well. But let me just state this, that in my 40 years, these traders that do well probably amount up to about 5% of all the traders on the planet. The rest of us, the 95%ers, and myself included, have a very difficult time in making ends meet following this type of plan. Okay, and you probably are shaking your head saying, yeah, me too. I just haven't been able to make any sense out of it. Sometimes it works, but most of the time it doesn't work. All right, it's the same way I traded it. So I had a very difficult time when I was first starting to trade with support and resistance. After a while, I started studying it because, after all, I was on the floor of the exchange, so I got to see things and I knew what was happening in terms of the stocks I was making markets in. And here's the true definition, in my feelings, what application is of support and resistance, because this is what I finally surmised, and I really believe to this day this is the true definition of all what support and resistance is. And remember, as I stated earlier, keep things simple. You're going to be surprised how simple this definition is. And I'm not trying to be condescending or arrogant, but it really is this basic. Because all support and resistance is that support equals that at some time, at some price level, there were more buyers than sellers. All right? Once again, not trying to be condescending, but that's all it means. It means at some point, at some price level, there were just more buyers than sellers. It's that simple. Remember, keep things as simple as possible. Don't overcomplicate even your definitions of certain techniques. So therefore, resistance simply means that at some point in time, at a certain price level, there were more sellers than buyers. Now, how did I come up with this definition? Well, once again, remember, I made markets in roughly about 50 stocks. So I got to see and I took orders from large brokers and institutions. So every once in a while, I would get an order and say one of my stocks, one of the stocks I traded was US Air at the time. And I'd get an order to sell 500,000 shares at 50. All right. So when price started to get up to that level, all right, people found out that there was a large seller there and price couldn't get through there. There was 500,000 shares to sell and they probably had more. So that created at a certain point in time at that level, which was $50, resistance. So price couldn't get through there. Okay. Now, was there any guarantee that that order was going to stay in my book for a week, for a month, for a year? Absolutely not. In fact, so many times I would see orders placed in my book like that would automatically create support or resistance. And then in as short as maybe 5 minutes, they would be canceled. So what happened to the support? What happened to the resistance? It was good for maybe 5 minutes, maybe an hour, maybe a day or a week, but after that, it was gone. Maybe the seller changed their mind or the buyer changed their mind or the big institution said, we're not going to do this anymore. Let's go into another stock. Okay. So at that point in time, there was a buyer or a seller creating this false sense of security that there was support and resistance, but there is no guarantee that they're going to stay there. That's why support and resistance doesn't work, because we're betting on someone keeping an order in there or having more sellers or more buyers at a certain time. And we can't, there's no way we can determine that or we can guarantee that that's going to happen. It's going to stay there. So that's all it meant. Were these so-called buyers or sellers going to remain in their positions? Absolutely not. So it would be silly to try and place your trades based off of what they're going to do, because we had no idea what they're going to do. So therefore, the true application, in my feeling, was simply to do the opposite. Sell support and to buy resistance. That, in my opinion, is the true way to trade support and resistance. So how do we do this? Okay, how do we actually trade this way? Well, first we have to define what support is. And support, remember, keeping things simple, support is simply a 3-bar pattern. As you see here, you can call this a pivot or a pivot low. And all this 3-bar pattern is, you have a bar that creates a low. Bar number 2 creates a lower low. This is lower than bar number 1. And bar number 3 creates a higher low. So you have this type of a V pattern set. This is all support is, because there are buyers here. That's why price came down, bounced a little, came down again, bounced a little, and then came down again, but not as far. This is where the buyers are. Is there any guarantee that they're going to stay there? Absolutely not. So why would we guarantee that we're going to, piggyback whatever they do? We have no idea what they're going to do. So what we want to do is wait for price to trade through on the downside here. This means they're no longer there. The buyers are no longer there. And that's our cue to sell. So we're doing the opposite. We're not going to hold on to these false beliefs that that support is going to stay there forever. We're going to do the opposite. Conversely, here is what resistance is. It's simply a 3-bar pattern, the opposite side of the coin. Bar number 2 goes up and creates a high. I'm sorry, bar number 1. Bar number 2 goes up and creates a higher high. And bar number 3 goes up and creates a lower high. So you have this type of arrowhead or upside down V. Okay, this is where the sellers are. Price goes up, can't get through this level, goes up a little higher, but still can't get through. Next time, it goes up even less. So there are bona fide sellers here. Do we know how long they're going to stay there? Absolutely not. We have no idea. So we're not going to bank on that as a point of reference for us to sell. We're going to bank on that as a point of reference for us to buy, but only once we trade through. Once we go higher than that 3-bar pattern, that is our setup to buy. It's that simple. Remember, keep things as simple as possible. Now, here's what most people have difficulty with. They say, Steve, okay, I kind of understand this concept, but it's difficult for me to let go of what support and or resistance really is, because I've always been taught that Resistance is supposed to look like this. In other words, we're supposed to hit, try and, hit a level and keep pushing against it for a number of bars, maybe 10, maybe 20 bars before we break through or break down. So it's hard for me to just think it's 3 bars. Well, if you look at this, this is an hourly chart of IBM. Now, if you want to make yourself feel more comfortable, all you have to say is, listen, go up to a higher time frame. All right, so let's go up now to a daily time frame. Here's the same time period, the same area in the time reference, but now we've just condensed the bars. So, this is the same exact time period. We've just gone up to a different time frame. So know that at any point in time when you see that 3-bar pattern on a smaller time frame, that's the old way you were taught to look at, with a bunch of bars, 20, 30 bars, hitting a level that can't get through, okay? It's the same way to the downside. Someone would look at this and say, well, Steve, this is the way I've always been taught. This is the way support's supposed to look. I mean, we're supposed to hit it, bounce up, hit it, bounce up. It's hard for me just to think I'm only going to look at 3 bars. Well, let's go to a higher time frame. This is a daily bar of the euro dollar. Let's go to a weekly bar. Here is the same time period. All we've done is condensed things by going to a higher time period. So every time you see this 3-bar pattern, just know that on a smaller time frame, you're getting that standard conventional tons of bars where we're either hitting against resistance or hitting against support, okay? If that makes you feel more comfortable. So let's look at some examples and see how to implement this very simple technique, but what I feel is the correct way to trade. As we look at this chart in SYY coming into April, all right, obviously we have a number of little short-term 3-bar pattern tops here. 1, 2, 3, 1, 2, 3, 1, 2, so they're all over. These are all so-called resistance levels. And all you have to do is identify where they are. As we see here, we've identified them with this green horizontal bar. And each and every time you go through, that's your setup to buy. Now, had we done the opposite, the way conventional wisdom tells us, well, we would have picked this area and said, okay, well, we can't get through here. This is nice resistance, and the guy in the chat room I follow said we shouldn't get higher than here, so I'll sell. And you sell, and look what happens. It never goes down. There's no consistency in trading support and resistance conventionally, all right? So you want to, what we call fade it, do the opposite, because there's no guarantee that these sellers are going to stay here. At some point, there were sellers here. That's what caused bar number 3 to go down lower. But then when this next bar went up, there were more buyers than sellers, or else the sellers left. They just said, you know what, we're not going to sell anymore. We're going to go higher. And maybe they moved their order up here, all right? And then that didn't hold, so they moved their order up here, and so on. So it's silly to try once again and rely on what the sellers are doing. Same thing holds true for buyers, all right? Obviously, there's a lot of 3-point pivot charts, the 3 bars, all the way down. At each and every one of these points, I'm sure people were saying, well, there's valid support here in Tesla. Look, we made a kind of a double bottom here. We've really come down way too far, too soon. All the indicators are oversold. The guy in the trading room says we've never been at this low before this quickly, so you've got to buy it. The institutions are all touting to buy the stock, so there's got to be support here. Okay, well, what happened to the support? Stock goes down even lower. Remember, keep your trading simple. Don't overcomplicate it by listening to these outside sources. My mentors taught me there's only one thing you should listen to, and that's the chart in front of you. So that's all you should be concerned with. So if we're looking at this stock, all we have to do is find where the short-term bottoms were. Okay, this is where the so-called buyers were, the so-called support was, and each and every one of the times that these are violated to the downside, that's your sell. So do you see here in Tesla coming into February and March, the only people who lost money are the people betting off these so-called support levels. But the people that traded this way actually are the ones that made money. They sold all the way down. Now, I'm not going to sit here and tell you that this technique is 100% foolproof. It works all the time and that you'll never lose this way, because that would be silly, and we don't believe in that. Remember, we're an educational company. We're trying to point out everything to you. So let me point this out. Here's an older chart of Oracle right here. Now, using the same technique where you have the 3-bar pattern either on the top for resistance or the bottom for support, you would buy if you went through resistance and sell if you went through support. So if you did that, you would have purchased here once you traded through, and then hopefully the stock would have gone up, but unfortunately it didn't, so you were stopped out. Now you're short. So now you're short, and guess what? It goes right back up, so you have to cover your short and go long. So far you don't have a winning trade yet, and you're long the stock. It goes down, but you're not stopped out, so you decide to buy more, and here's your support way down here. But look what happens. Some news comes out, and you're caught selling it at the opening down, way down, points lower. Okay, so there's not one winning trade here. This is what will happen in a whipsaw type market. This is a classic whipsaw scenario where you basically go up, go down, you buy, you get stopped out, you sell, you get stopped out. So we have to ask ourselves, since nothing works 100% of the time, we have to ask ourselves, how can we increase our odds for success? Okay, well, it's simple. Here's the plan. We're only going to buy resistance. Remember, that's when it goes through the upside in an uptrend. That's the only way we're going to do it. And we are only going to sell support in a downtrend. Okay? So if the market is basically going sideways or there's no direction, we're not going to do anything. We have to wait for an established uptrend in order to buy. We have to wait for an established downtrend in order to sell. The only trouble is, how do we define what the trend is? Everyone has a different idea and method for discerning what the trend is. Well, in our opinion, you've heard me speak about this before, the best trending indicator I know of is the PET-D. This is a tool I was introduced to over 35 years ago on the floor of the exchange, okay? A simple calculation that you had to calculate from a formula that was given to me by my mentors. And what I've done with the help of Pro Trader Strategies is that we have turned it into a color bar algorithm. So there's nothing you have to calculate anymore, thank goodness. And you can trade this on intraday bars now instead of having to calculate it every 5 minutes. And what it does is it simply colors the bars green if you're in a short-term uptrend, or it colors them red if you're in a short-term downtrend. So now you know what the trend is. You don't have to worry and think, well, what's the pattern? Higher highs, higher lows, and vice versa, or I have to wait for these indicators to cross, or for these moving averages to cross, or I have to see what someone's saying in a chat room to tell me what the trend is. You don't have to worry about that. The best tool I know of that really translates what the market wants to do in terms of trend is the PET-D. So here's how we're going to use it, just trading support and resistance. We're going to look for price to trade above an all green pivot high, all right? And then we're going to buy when price trades one ticker pip above that so-called resistance. So in other words, remember we said this is what resistance looks like. It's a 3-bar pattern, okay? Well, now we want to see that all these 3 bars are colored green. If we trade through this on the upside, then we will buy. Why? Because this is telling us that the trend is up. Remember, we never want to buy if the trend is down, because most likely we'll get whipsawed. So we only want to buy when the river is going in our direction. In other words, we only want to jump in and swim downstream when the river is going in our direction. We don't want to do the opposite. Now conversely, what if we want to sell? Well, we're going to look for price to trade below an all red pivot low. All right, we're going to sell when price trades one tick or one pip below that support. So remember, this is what we defined as support, a 3-bar pattern. Now, in order to trade with the trend, we have to have all 3 of these bars red. Okay. If price trades below them, then we will be going short, but only if they're all red. Okay, it's that simple. So let's look at some stock examples. Here's IRM coming into the beginning of April. Now, it's safe to say, looking back in hindsight, we'll say, well, Steve, why would I need this PET-D tool? All the bars, I mean, we're going straight up, so I already know the trend is up. Well, sure, looking back in hindsight, you know right now, but how about here? Did you know well down here in January and February that we were going up? Well, the PET-D did, because the PET-D was already coloring the bars green. So once you see that the bars are green, you look for that 3-bar pattern again. Remember that high, followed by a high, and then a lower high. We see them all the way up here. And that's where the area is that you just simply want to buy once you trade above. So you see how simple it would be now to buy IRM, rather than trying to look for an area, say right here, to say, well, Steve, I don't know, the chat room I go to, they said that this is really big support, resistance here at 30. And there's a lot of institutions, and the volume is confirming it, and they're all selling here. So I don't know if I want to buy here. What direction is the trend? The trend is up. As long as the trend is up, The bars are green, and we don't want to go against the trend. If the trend is up, we're buyers. If the trend is down, we're sellers. Remember I said in the beginning, keep things simple. The only trouble is we've always been taught the opposite. If the trend is going down, we want to buy because it's our human nature to buy as low as possible, And if the trend is going up, we want to sell because we want to get out at the top high, at the very high tick, and we want to sell everything. It's silly because you'll never get that. It's really folly because very rarely will anyone be able to pick tops or bottoms. What you want to do, just to be consistent so that you can be trading 20, 30, 40 years, is to be in sync with the trend. The best way I know how to do that is by trading this support resistance method with the PET D. How about TXT? All right. Now, initially we had 3 green bars right here, and this was telling us we could buy if we went above it. Remember, that's the key. But we never went above it, and then the bars changed colors. So now we have the 3-bar pattern to the downside. So we're just going to simply sell once we trade below that. And we have a number of winning trades. You could have been short roughly around 41 on the very first one, and the stock went down 10 points in a month. How about MLM? Okay, coming into a couple of weeks ago in April, all the bars turned green roughly back in February. So all you have to do is pick those short-term tops. That's your so-called resistance. And look how there was resistance at each and every one of these points. And did that resistance hold? Absolutely not. So why not just buy? Because when the resistance doesn't hold, it means there are no longer more sellers than buyers. It means now that there are more buyers than sellers. So be on the right side of the market. How about FSLR, First Solar? Initially, once again, the bars were green, but we never went above this so-called resistance. So once the bars turn red, now we just look for the so-called support levels, and that's our key to get in to go short. You could have gone short right here before this news event happened. See? Remember, a lot of people will say, well, Steve, what happens when things turn around? Well, I'm not going to promise you that it won't sometimes, but the majority of times, if you're in sync with the trend, you have the odds in your favor. Well, here was obviously some news announcement that happened or something that caused the stock to gap down about 4 points, but we already knew that prior to that. We were already short. We didn't listen to anything. We didn't go to some chat room and listen to some guy tell us about what he thinks the stock or the earnings is going to be. All we listened to was the stock in front of us. PPG obviously has been going straight up. We had 3 red bars in the beginning, but we never traded below. So now we have nothing but resistance levels, okay? So-called resistance right here. We're just going to simply buy once that resistance is broken. How about HRB? This is extremely important because someone looking at this would say, well, Steve, there's really not enough information I have here. It's only about 10, 12 bars. I have no idea what this stock's going to do. I need to look at news. I need to look at the financial reports. I need to see what the market's doing. Absolutely not. All you have to do is apply the PET D, and the PET D is telling you this is in a downtrend, all right? If you're in a downtrend, all the bars are red as they are here, so you can apply this technique. You could have gotten short at the first so-called support level once it got broken, roughly about 33, and look what happened, okay? Once again, obviously some news came out 2 days later where the stock gapped down about 3 or 4 points. Did we know anything about it? Absolutely not. We don't look at the news. In fact, we suggest that our students never look at news because it's just one more thing to complicate your trading plan. There's absolutely no reason to look at news. I was a trader on the floor, and I was in charge of making markets for roughly about 50 stocks. I never looked at the news once my mentors taught me this simple rule. I mean, if anyone conventionally should know about the standing of a company and the earnings, you would think as a specialist, the person making markets in it. I never looked at the news. In fact, I stopped looking at the news over 30 years ago in terms of trading. Now you can apply this to indices and ETFs. Here's an ETF IWM of the Russell 2000 index, and as you can see here, when the market was going up, the bars were green. The minute it changed direction, they turned back down to red, and then they changed back up to green again. Someone would say, boy, this is a choppy market. How do you trade this? It's simple. You just use the same technique we're talking about, okay? And I know we're just talking about an entry technique today. I know a lot of you are probably saying, well, Steve, where would I place my stops? Where would I get out? How do I actually trade this? I'm going to speak about that in just a few moments, so don't get too worried here. Now, a lot of people say, well, Steve, I don't trade stocks. I trade commodities. Okay, here's a monthly chart of crude oil coming into April, May, okay? What color are all the bars? They're red. So this means we're going to be only a seller. All right. We've known that for almost a year now, looking back at a monthly chart. All right. So if we're going to be a seller, we look for this so-called support levels. Did they hold at all? Absolutely not. I'm sure a lot of people were saying, well, there's major support here. This is where we've got to hold. What happened to all the buyers? Okay, we continue to go lower from 60 down to 30 basis points. Now, if you don't trade monthly bars, well, you can go to a daily time frame. Okay, here's the same market on a smaller time frame, daily bars, the same thing. All the bars are obviously red now, so you just use the same technique. What happened to all the so-called support levels in crude oil? See, the only people that would have lost money trading were the people trying to pick a bottom. And in my nearly 40 years of trading, picking tops and bottoms are a recipe for disaster. You'll never hit the top, you'll never hit the bottom. Sure, every once in a while you'll get close and you'll have this false sense of security, just like the slot machines, that you're doing well. But over time, there's really no consistency in picking tops and bottoms. You'll have consistency and be able to trade 30, 40, 50 years down the road if you simply trade in sync with the market as opposed to trying to go against it. Now let's look at the E-mini markets. The same technique can apply. We don't have to change anything. Here's a 30-minute chart of the E-mini. As you can see, in hindsight, it's been going higher. But we knew well back here that we were in an up market. Why? Because all the bars were green. So all you have to do is simply apply the same technique, the so-called resistance level. I'm sure someone was saying, boy, there's resistance here. We can't get through this level. We're probably going to roll over and come lower. Nope. It's not the way it works. Remember, if the bars are green, the market mostly is telling you it's going higher. And all you have to do is just continue to buy. Now you can go down to a smaller time frame. Here's a 2500 tick bar. Market's going down, then reverses and goes back up. Well, you just reverse from selling to buying. Now this was last week in the E-mini futures on a 15-minute time frame. Two different scenarios. If you wanted to trade it on minute bars, on a 15-minute bar, as you can see here, the market took off in the first half hour of the day. The bars changed from red to green, and so from then on you just look to buy. Okay. Now the same day you could have gone down to a smaller time frame. If you didn't want to trade 15-minute bars, you go down to a 2500 tick bar. And once we change from red to green, well, now you turn to a buyer because you couldn't get short here because nothing ever went below. So now you look to buy because the bars are turning green. We knew well back here that we were in an uptrend. So all you have to do is simply buy. And you could have gained 12 points in the first 2 hours of the day. That's $600 roughly per contract. And we can also apply this to currency pair trading in the Forex markets. Here's a monthly chart of the Canadian dollar, just to show you all different time frames, different markets. Now, obviously, looking back at the Canadian dollar all the way back to 2013, 3 years ago, the bars have been green. All the way back here, we already knew we were in an uptrend, even when the market looked like it was going sideways. So as long as the bars are green, you look for these little tops, these so-called resistance points, and that's where you want to buy, okay? So if you're using this as an investment tool, you think you would have done pretty well trading the Canadian dollar in a monthly time frame? Obviously, most people don't trade monthly time frames. Let's go to an hourly chart of the dollar yen. This was just a couple of weeks ago. Okay, as we can see here, an hourly chart. Where are all the bars? The bars are all going lower. They're all colored red. So we look for the so-called support levels. Why are we trading this? Because we know that the support will not most likely hold in a downtrend. So we're just going to simply sell the dollar yen every time we trade below. Once again, you see how simple trading is when we get rid of all this useless noise that we've been taught. Trust me, I know all about that because that's the way I traded my first 2 years on the floor, and it didn't work at all. I thought I was going to get fired because I couldn't make any money. It wasn't until my mentors took me aside and said, Steve, your trading is far, far, far too complicated. It's just way too overcomplicated. Just simplify things. Instead of listening to all these things like news, like what the institutions are doing, what volume is doing, all the tons of indicators, chat rooms, trading rooms, all these guys on TV, just listen to one thing, the market. Because most of the time the market will tell you in advance what it wants to do. For some reason, we've all been trained never to listen to the market, but to listen to everything else except the market. So let's recap before we go into questions and answers here. Remember, we talked about conventional trading of support and resistance, which simply says that at a certain price, at a certain time, price will stop and reverse, okay? But we've seen through examples that there's no such, consistency to that. There's no truth to that. So the true definition of support and resistance is that at these so-called support levels, there were just more buyers than sellers at a certain point. Does this mean that price is going to stop and reverse? Absolutely not, because we don't know how long those buyers are going to be there. They could leave any second. So it would be silly to base our trades based off of them. Silly. So the correct way to trade is simply to do the opposite. Once those buyers leave, price will go below that point of support. That's when we simply sell. We do the opposite because there's no one there to keep price up anymore. Okay? And now, if we want to increase our odds for success using this technique I just taught you, well, then you simply add a trending tool, which is the PET-D. In my opinion, you can add any tool you'd like that tells you what the trend is, but in my opinion, the best tool in my nearly 40 years to find out what the trend is the PET-D, because it's so simple. It tells you in advance, you know, whether the bars are red or green. There's nothing you really have to do. So, in conclusion, I want you to ask yourself, and ask yourself honestly, do you think any one of these edges could have helped your trading this past year? Okay, even if it's not the PET-D, what if we could have used this technique for support and resistance? I'm sure many of you have been trading support and resistance the conventional way and are having a difficult time. Okay, do you think this could have helped your trading this past year? What if I could share with you 3, 4, maybe 5 more different techniques that are entirely different, but just as powerful as what I just taught you right now? Well, this is what we'd like to share with you all today for attending. This is our daily special for all the attendees in today's presentation. What we're offering today is our Secrets of a Stock Exchange Specialist training sessions. What this is a 3-hour video. I spoke about 3 years ago in Denver, Colorado for about 3 hours. And I was the head speaker there at a seminar, and I gave a lot of different trading techniques and styles and different high probability trading edges, similar to the one I just shared with you right now, okay, but entirely different. I also talk about which indicators to use and which ones not to use. I go into the very detailed meaning of what a system is versus a strategy. But I think the most important thing on this 3-hour video seminar is that I gave the entire rules: where to buy, where to sell, where to place your stops, money management, all included. As you remember, I just showed you an entry technique. It's not a valid strategy or system, meaning that it doesn't give you all the rules. I only gave you one piece of the puzzle today. But I have an entirely different strategy, which is strategy number 1, that I give in this 3-hour video seminar, and I give you all the rules. In fact, let me share with you some of the recent signals that this strategy generated for our strategy number 1 course members. As you see here, SHW, this has nothing to do with waiting for tops to go above. It's based off entirely different rules. It's a pullback strategy. Someone looking at this would say, well, Steve, there's no pullback. We're kind of just in a whipsaw, going up, going down, going up. I have no idea what this is going to do, but strategy number 1, which you will get all the rules to, generated a buy signal. And as you can see, the stock went up 30 points in the next 3 weeks. You can also short stocks. Here's an example in eBay. As we can see here, it looks like we're going kind of sideways to rolling over, and we generated a sell signal, and the stock went down 5 points in the next 2 weeks. Now, the same rules can apply to futures trading. Here's an hourly chart of the E-mini. Someone looking at this chart would say, well, Steve, we had a nice run up, but we're now in a full-fledged downturn. We're simply going lower. Maybe we're going to make new lows. Well, according to strategy number 1, which once again you will have all the rules to, where to enter, where to place your stop, where to exit, it generated a buy signal. And the E-mini went up 20 points in just about 5 hours, or $1,000 per contract. And lastly, we're going to apply it to currency pairs. It works on any market, any time frame. As you can see here, the euro-yen generated a sell signal. Now, this is a weekly chart. Had you taken that with all the same rules that apply, well, that's over 1,000 pips in just 3 months. That's roughly about $10,000 per contract, okay? We give you all the rules, all the entry points, all the exit points, all the stop placement, including money management, in our Secrets of a Stock Exchange Specialist training sessions, included with many, many more high probability trading edges, similar to the one I just shared with you today. Okay, this is 3 hours of intense trading techniques that we're giving to you today at a special deal. Now, as I stated before, Pro Trader Strategies is my sister site. They market and promote all of my courses. On their website, they have this marketed for close to $1,000. But because of your attendance today, we are discounting it greatly down to $37. So I can't think of a better deal where you get this much jam-packed information as well as a full-fledged strategy with all the rules for only $37. But there's one more thing that I didn't include there that is also in the course. You will have lifetime correspondence with me. So I will be your personal mentor along the way. You can contact me whenever you'd like with a question, or if you don't fully understand the process of the strategy, or maybe you have an idea of how to implement something, you can always contact me, because once you buy a product, you are a student of mine for life. So this is all included for $37. I think that probably most of you, if you're trading today, spent more than $37 just in commission costs alone. So I can't think of a better deal. You can't go out to dinner for less than $100 these days. $37 is a great, great price for all this information. Here's how to take advantage of this deal, because it's only for a limited time only. I believe just for the next 24 to 48 hours with Pro Trader Strategies before the price goes all the way back to nearly $1,000. So just simply contact Pro Trader Strategies, my sister site. There's their email address. You can also call them directly if you like for more information at 310-598-6677. And as you see in the very bottom there, there is the link to the deal for the $37, but that's not live. If you want to simply click on a live link, go to the chat box on the far right of the Go to Webinar column, and you'll see a live link has been posted under the chat box there. And you can simply click that on, and it will take you right to the $37 sign-up page, okay? So lots of ways to take advantage of this, but remember, you have to do it within the next day or two, or else it goes back to the full price. So I'm going to leave this information up here while I open up the question and answer box. And once again, thank you so much for holding off on any questions till the end. Okay, first question comes from Bob. Says, is the buy resistance on the fourth bar example similar to the Wyckoff jumping the creek, likely followed by back to ice? Well, you know what? I'm not really familiar with that Wyckoff technique. All I know is that my mentors basically taught me. They said, Steve, listen, look at your book. When someone comes in there and puts in a big order to buy, it creates this false sense of support, all right? And if you look at the chart on that, most of the times you'll see that 3-bar pattern. So that's all we're interested in. We don't want to overcomplicate it by calling it all these, different titles or whatever. It's just, you can still call it support, but it's a 3-bar pattern, all right? It doesn't have to go through it on the 4th bar or even the 5th bar. All that requires is that you're still in a downtrend, okay? And if we trade through it, that's your signal to sell, to go short. And just do the opposite if you're buying. I'm not familiar with the Wyckoff techniques you're talking about, so I really can't answer that, Bob, okay? Stan says, yes, you need to follow the trend. Yes, Stan, and once again, I'm not trying to preach. I'm telling you from firsthand experience. I told you I traded through the crash of 1987. Now, what was the trend during that day of Black Monday? Obviously, it was down, right? Well, trust me, I hadn't met my mentors yet, and what was I trying to do that day? I was trying to buy, okay? So how do you think I ended up on the end of that day, okay? So there really is no consistency in trying to pick tops and bottoms. I know it firsthand. I didn't start becoming consistent until I started trading with a trend. So there are no techniques and no strategies at specialist trading where we're ever going to try and pick a top or a bottom. Now, it may appear that we're picking a top or a bottom, but all we're doing is picking a bottom in an overall uptrend or picking a top in an overall downtrend. So in some capacity, we will always be in sync with the overall trend, okay? Lars says, thank you, I have a program that does this. Great, that's very good. That's very, so all that matters is that you know this technique. And one thing I want to just say, if you just learned this and your eyes are lighting up like so many new students I have, please paper trade this first though, because even if you think, boy, this is fantastic, this is so easy, most students lose money right off the bat because they haven't really properly studied the process and they don't really know how to properly implement it. So paper trade it until you fully understand it. Once again, if you become a member of the course and you do purchase the course for $37, you can always contact me and send me emails and I'll answer any question that you may have, okay? Steve says he thinks he purchased this in the past, but he can't seem to find it. Steve, contact Pro Trader Strategies. They may be able to help you with something like this, okay? They handle all of that stuff. Richard says, is PET D included in the stock trust? No, it's not, Richard. That's a separate technique, and it's a little bit more expensive. I'm not trying to in any way say that you can only trade this with the PET D, but the PET D just showed you the consistency you have once you're trading in sync with the trend. If you feel you have a technique that can really define what the trend is, then go ahead and use this support and resistance technique I just shared with you with that. Or if you think you know what the trend is, go ahead and do it. But remember, this technique is only to be used with the trend. In other words, if the trend is going up, you're only buying once price goes through the so-called resistance, because there really is no such thing as resistance. And if the trend is down, you'll only be selling once price goes through the so-called support. But you won't be doing the opposite, because then you'll be fighting the trend, okay? The only reason I showed the PET D is because that's what I use for everything I've been using for the past 35 years to determine what the trend is. So that's the only way I know how to really define, and it's so simple and so powerful. I would say do a Google search on the PET D and a lot of our testimonials, or go to Pro Trader Strategies and read some of their testimonials on people at the PET D. It's a great, great tool, and people love it. You can use it for any strategy in trading in sync with the trend, okay? Yes, the PET D is available at Pro Trader Strategies. You just contact them, okay? That's one of my methods that I got from the floor, and Pro Trader Strategies handles all the promotion for that. Let's see, based on your experience and students, can this number 4 strategy produce 10 to 15% per year? Mark, first of all, there's no way to quantify that, because as I stated, I don't know if you were here in the beginning, that one of the first things I said is the only way you can become consistent in the markets, in my opinion, is what? Is by making your own decisions, okay? You have to make your own decisions. Therefore, if every one of our students, we have over 10,000 students around the world in tons of countries in every state in the United States. So we have over 10,000 students trading. There is no way that each and every one of them are trading strategy number 4 the same. There's no way. Some people use a different entry approach that I give them. Others use a different exit approach. Others are trading conservatively. Others are trading aggressively. So how can you define what 10 or 15% or 20% would be? Because everyone trades it differently. So there's no way to do that. Plus, we don't believe in that. I used to trade systems that offer percentages and statistics. I even used to teach them. And in my nearly 40 years of trading, I have found no systematic approach that gives consistency better than when you make your own trading decisions. So we don't really believe in saying that you're going to make so many percent. We wouldn't tell you that, because everyone trades it differently, okay? There's no way to come up with that number. And plus, if you were here in the beginning, the very first thing I said is we're an educational company. We're not a statistical company. We're not a systematic company, okay? Renee asks, can you speak to the stops in this approach? Well, Renee, that's something that's in the course. You know, for $37, you can find out a multitude of different stop placement. But, you know, if you've been trading for a while, they're very simpler way. You could place your stop if you're long just below the last previous low. You could use a money stop. It's up to you. But if you really want to find out more about stops and more about entry points, more about exit points, $37 is a very inexpensive price to spend to find out tons of information, okay? Then, once again, just like I told the last person, then you decide for yourself which one you want to apply, the one that makes you feel comfortable, okay? Because everyone uses different stops, everyone uses different entries, everyone uses different exit points, okay? Let me see if there's any more questions here. Letitia's asking, would this work for options? Yes, it would. In other words, rather than simply buy or sell the stock, all you have to do is just purchase, a directional call or a directional put. We have many students who trade that very same way. They say, Steve, listen, I just take your setups, and if it says to buy the stock, I just buy the option of the one of my choice, and that's great. And they've reported some nice, consistency. So that's all we ask for. Remember, everyone trades it differently, and we encourage that. We're not a systematic company. We don't tell you how to trade. And if we did, then I could give you statistics and numbers. But that goes entirely against our philosophy. We do not want to tell you that you must enter at this point, you must sell at this point, you must only trade this stock or this market, you must only trade this time frame. That's silly. Because if there's one thing I've learned in all these years, that's a recipe for disaster. That's why we don't have a chat room or a trade room, because they turn it into a crutch, whereas you just want to mimic and mock whatever the teacher is trading. And that trading should never be that way. Everyone should make your own decisions. So we provide you with all the tools, the tips, and techniques that have stood the test of time in my nearly 40 years of trading, that have shown high levels of consistency, and then we work with you you're my student and I mentor you along to make you feel comfortable with a plan that works best, okay? You're getting 40 years of experience right alongside with you to put something together with all these techniques that works great. Now remember, in closing, call Pro Trader Strategies with any questions that you may have concerning the PET D or different strategy, or if you want to, possibly, buy this program again if you bought it in the past. That's their phone number or their email address, and the live link is in the chat box on the far right. The link you see on the screen in front of you is not live. You can copy and paste that if you'd like, but if you want a live link, simply go to the chat box on the far right, okay? But remember, if you want to take advantage of this, you have to act soon, because it's only going to last for about the next 48 hours. So you have to act soon on taking advantage of this deep discount before the price goes back up to nearly $1,000, okay? Okay, in closing, I just want to say thank you so much. I hope you got something from this. Remember, we're an educational company. I hope I educated you a little bit and gave you some insight in what I feel is the true definition of support and resistance and what the true a way is in which to trade it, okay? Thank you so much. Please contact Pro Trader Strategies with any questions, and I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. I will see you next time. Bye-bye.